Are we looking at yet another shakeout here in gold?
Well, Alex, I really don't see that happening simply because of the incredible amount of physical demand that we've seen in the market. We saw record U.S. mint gold sales in April. We've seen massive premiums in the physical spot market around the world, in Dubai, in India, and China. We're seeing just a record amount of demand, and we're also seeing record amounts of short interest on the COMEX market. So no, I think that actually this could be a great buying opportunity.
But on the flip side, we're also seeing massive outflows in the ETFs. I mean, since the start of this quarter, we've seen about 236 tons of outflows. Describe the balance between physical and paper gold.
Sure. Well, the main difference is that physical, of course, you have to have in your hand, and it actually is deliverable, while paper gold is not typically deliverable. So, you know, we've actually seen a lot more offtake from the futures, the paper gold markets, in actually seeing individuals take delivery. So we've seen record lows in the amount of eligible gold, for example, in institutions like JP Morgan. So we've seen a lot of offtake, and eventually those premiums between the futures paper market and the spot market get big enough, you have enough investors taking delivery, all of a sudden there's squeezes for naked shorts. And that should make gold and silver, physical gold and silver prices skyrocket when that occurs.
So do you see, say, futures investors are rotating out of that market and into the physical market?
I think that that's what we're seeing here. I mean, that's the logical answer to the numbers that we're witnessing. So yes, I think that is occurring, Alex.
Now, what about the broader picture here for gold prices? I mean, just today, you know, we get the CPI, PPI, lower prices here in the U.S. We're just not getting that inflation that gold buyers had been so worried about. How much longer does that weigh on prices?
Well, I think ultimately the lower you see CPI and PPI figures, the more pressure that's going to put on the Federal Reserve to keep its zero interest rate policy intact and to increase quantitative easing in the amount of printing that occurs, because ultimately the Federal Reserve cannot tolerate declining prices. So they cannot tolerate price deflation, or else the banking system gets into some trouble, because there are only so many reserve assets that the banks have on hand in that scenario.
You know, and it's interesting you brought up the Fed, because we did hear Philly Fed President Charles Plosser speaking today about ending QE this year. What's the gold market pricing in?
Well, I think that the gold market right now, it looks like it might be pricing in maybe some kind of possible curtailment of QE, but just as Warren Buffett said recently, there's really, I think everyone is really wondering how the Fed is going to back themselves out of this position that they put themselves into. So we're in unprecedented territory here. So I really don't see how it's going to be possible for the Fed to do anything but increase QE over time.
Increase, wow, okay. And also the other thing that's really been hitting gold today and yesterday as well was sort of, you know, George Soros selling some of his stake in the GLD, other well-known fund managers also selling gold. Talk a little bit about the peer pressure that happens in the market.
Well, I think anytime you look at the hedge funds, and just to preface, George Soros, I believe, just sold just a fraction of the position that he held in GLD. But you know, you're looking at very large momentum plays. You're looking for large short-term gains. I mean, they're very sophisticated investors. I mean, one thing about gold is it's durable. That's one of the beauties of it versus an equity where there is an actual life there. So gold is durable. It's been durable for thousands of years, and so it holds its purchasing power. So I mean that's the real drive of that's why it's a store of value. Now, it has these statistics that can't be changed by man.
And Anthem Vault winds up selling and buying gold for investors. Any word on what your clients feel when they see, you know, a $100 drop in gold in a week?
Sure. I think they see it as a buying opportunity by evidence that we're on pace for our largest record month of buying from clients here. So I think the retail investors are out and they see, well, we have great value on real, directly owned gold and silver, physical gold and silver. So the paper markets are going to give us a discount. We're going to take that as a buying opportunity. And
my last question, we only have about 45 seconds left. I want to know about silver. What's your outlook for that market?
Well, I'm actually even more bullish on silver than I am on gold. So I think silver is tremendously undervalued. We've seen a ton of interest in silver buying here. There's a lot less above ground store of silver than there is of gold, simply because central banks these days no longer hold silver. So there's a tremendous opportunity there, and the more issues that we see with miners in industrial metals, since silver is mostly obtained from industrial mining, the more upside I think we have for silver. So I think silver is a very exciting buy.